If you're self-employed, then you may know that the home loan requirements may be slightly different than if you were actually employed. So in this quick video, we're going to take a look at the specific home loan requirements for those of you out there that are self-employed. So stick around and we'll cover off the important bits. So to set the scene a bit, even if you've applied for a home loan in the previous few years, things have really tightened up in 2018. The way that home loan lenders are verifying documentation and information has changed and it's become more stringent. That means that the home loan requirements for self-employed has changed slightly. So we're going to take a look at the various points that you need to be aware of and all the documents that you can have ready, so when it comes time to approach your mortgage broker or other lender, you're going to have all the required documentation, all the minimum documentation. I need to put a caveat out there and say that even though I'm going to cover off on a lot of documentation, lenders have this funny habit of asking for documents that aren't included in any checklist or anything like that. It just happens sometimes. I've got to live with that. So let's dive on in. So the first requirement that typically comes up for those of us who are self-employed, including myself, is that we need to be in business for a specific amount of time. So for most lenders, it's going to be 24 months, which is 2 years. So if you're newly self-employed, then you may not meet the requirements for some lenders. So the general time frame is 2 years. However, there are lenders out there that will look at 12 months, and there is potentially some who can look at less than that. So the important thing to do is to speak with a mortgage broker professional that is very experienced in helping self-employed people, and they'll be able to help you guide you down those alternate paths. But generally speaking, 2 years is the time frame, can be less in some circumstances. Now, if you're an employee and you're applying for a home loan, the lender wants to know how much you earn basically, but when you run a business, the lender also wants to take a look at the business performance of your business. So there's a few additional requirements, and these go above and beyond what most people will provide to a bank as part of a home loan application. So generally speaking, there's 4 areas where we need to provide evidence or documentation in, and that's income, liabilities, expenses, and assets. So let's take a look at the first one, being income documentation. So when it comes to satisfying the lender's documentation requirement for being self-employed, it's good to have the last 2 years worth of personal and company or business tax returns, as well as the last 2 years worth of business financial statements, balance sheets, profit loss, etc. Now, it's not going to apply every time, but it can be handy to have the last 4 business activity statements handy as well. You're not going to need to supply these with every application, but just in case, it's good to have them ready so you're not going to get surprised down the track. Now, over the last few months, banks have really cracked down on how expenses, so living expenses, are verified. So this is the second part of the documentation verification process, and that is expenses. So to be able to verify expenses, what we need to do is provide probably around 6 months worth of bank statements for any bank account, credit card, or otherwise that you pretty much process your living expenses from. So if you're withdrawing cash from a bank account to fund your lifestyle, then you need to supply that bank statements there, probably around 6 months is best case scenario. And also, if you're using a credit card to pay many of your bills, etc., also provide those credit card statements just to show how much it costs to actually be you, because banks are really cracking down on it at the moment. Next, the third area is liabilities. So the bank or lender wants to know how much you owe already, and they also want to know what your conduct has been on your existing loan or credit facilities. They want to, just generally speaking, banks like to lend to people that pay their loans back. So if we can show that, then that tends to work in your favor. So I always go a bit cautious here. I always say just provide 12 months worth of statements, or have them ready at least 12 months worth of statements for any existing credit or loan facility, credit cards, home loans, personal loans, car loans, whatever, any type of credit facility. Just have 12 months worth of statements ready. Also, it's handy to have either a copy of the contract or a copy of a statement that shows the various features, such as the term, the interest rate, whether it's fixed or variable, the balance, your repayment conduct, all those different things. Any break costs as well, any type of fees, so monthly fees, otherwise, make sure that you've got something that shows all those different aspects of your credit facility. Now, the fourth thing that banks want to verify is your assets, so the stuff you own. The most important one that you need to verify is going to be any property that you're looking to use as security. So if you have a home or an investment property that you're going to be using as security, have the rates notice handy. So the council rates notice, preferably the latest one. If not the latest one that you have. And then likewise, if you're purchasing a new property, then have the contract of sale ready if you have it. So if you haven't found the property yet, no problem. No problems. You're probably looking for what we call an approval in principle or a pre-approval at this moment, which is perfectly fine. But once you've found the property, make sure that your mortgage broker gets that contract of sale as soon as possible. So there is some other documents and that you may need to provide. So the first one is mandatory. You're going to need to be able to provide 100 points of ID. So make sure that you have that ready for your mortgage broker, just so that you can be ID'd up front and so that you're not chasing it down the track. If you've already got certified copies of your ID, that might be a good thing to have handy as well. For some self-employed people, we may need to provide a statement from your accountant for certain lenders. Now, this doesn't apply in every application, so don't stress about it now. I'm more telling you just to be prepared just in case this does pop up. And this statement from your accountant usually needs to be in a certain format. And the lender's got a specific letter that they like filled in. So there's no need to rush out and get it prepared before you apply for the home loan. But just keep in mind that if your mortgage broker comes back to you and says, hey, we need this accountant filled out. So if your mortgage broker comes back to you and says, hey, we need this letter filled out by your accountant, you can then just pass it on to your accountant. So maybe just give them a heads up if you're applying for a home loan. Finally, there's a payout statement or a payout letter. This is predominantly for people who are refinancing existing debt, and it just shows things such as the closing balance, any exit fees, all those things that we need to cover off, all those things that the bank needs to know in order to be able to effectively pay out your refinance line. So like I said at the beginning of the video, there may be a possibility that the lender is going to ask for more documents, so don't be surprised. This is going to be enough to get you started, but to get you across the line, there may be some additional requirements. So sometimes we'll provide documents, and then the lender will have questions off the back of the documents provided. So I'm a big believer that it's possible to save time and increase your chances of success with a home loan application if you're self-employed, if you engage a specialist early in the process. So as soon as you start thinking about either refinancing existing loan or buying a new property, whatever it may be, speak with a mortgage broker nice and early so that it can give you time to accumulate all the documents that you need, as well as for them to assess your particular needs and objectives so they can identify the best option for you. There's nothing worse than trying to run around at the last minute, trying to get everything together, because that's stressful for everyone. So particularly for you as the borrower, you want to make sure that you've got enough time as possible to make sure that everything can be completed, all the T's crossed, all the I's dotted. I'm also a big believer in speaking with a mortgage broker over your bank. The reason being that a bank is only going to speak to you about their particular policies or their credit criteria and their various loan products. The problem there is that if their credit criteria doesn't fit your personal circumstances, then they may not have another option for you. But if you approach a mortgage broker, they've usually got a panel of lenders that they use, and they're going to be able to identify the one that fits your needs and objectives and what's happened in your business and what's in your personal life to find you the most appropriate lender and loan. Now, the thing with being self-employed is that there are so many variables. There is so many things that can change. So everyone's got a different company structure. Some people are going to have just a company. Other people are going to have a company inside a trust. Some other people are going to have a company inside a trust that is run by a company. So there's all these different structures and there's all these different levels of complexity and different variables that your professional is going to need to consider. If you just go to your bank and they, if your situation doesn't fit their mold, then they may not be able to help, and then you're going to be wasting precious time. So to save time and increase your chances of success, engage a specialist mortgage broker that has experience dealing with self-employed people and more importantly getting their applications across the line nice and early so that you can increase your chances of success. Until next time, stay classy.